With the collapse of a major US bank and the fears of more banks collapsing all over the world, the stock market has been absolutely topsy-turvy over the past month. So how does that reflect on my personal trading 212 portfolio? In this video, I will share. So without further ado, let's get straight into the portfolio. So as you can see, the value of my portfolio is £2,495. However, my account value is £4,311 with some free funds of around £1,815. In this video, I'm going to go through all my holdings, my strategies, and everything that I do on my trading 212 portfolio. This is how I invest and where I put my money in my mouth is, or how the expression goes. So as you can see, my account value is considerably more than last month. This is because trading 212 is now my designated deposit portfolio, and this is where I put most of my money at the end of the month. I am most likely going to be opening my ISA with trading 212 next month. And therefore, instead of depositing money straight into the GIA, I might do it straight into the ISA. However, if the stock market crashes further, I'm going to be just forced to put in money whenever that is. So currently the free shares promotion is not working, so I can't show you how much free shares I've actually gotten. But I've received around £320 in free shares, which is really good. And thanks to all of you who have signed up. I never really asked for you to use my link, but people use it anyway, which I'm super grateful for. So as you can see, overall, my portfolio is down by £33, and that's a negative 1.33% return. I'm not exactly sure how accurate this is. This is because I sometimes do trades in my account and that kind of offsets the total return. This is because if you have a bunch of shares and you sell some of the shares, there's no way of knowing which shares that you sold at what price because it all just gets mixed up into one basket. So first of all, I have Walt Disney and I have 0.12 shares in that, and that's down by 92%. And over the past month, Walt Disney has gone into steady decline. This is because the overall S&P 500 has seen decline, the Nasdaq has seen decline, all of these stock market indexes have seen decline because of fears that other banks will fail following the event that Silicon Valley Bank, one of the largest banks in the US and the second largest bank to ever fail in the US actually, collapsed, leading to a ripple effect in the banking sector, the government having to kind of bail them out. This will have long-term effects on the stock market and investors' trust. Furthermore, interest rate rises next week are unknown. Analysts are predicting the interest rate hike to slow down, although that is not too certain because the Federal Reserve in the past has tried to reduce interest rates really fast, leading to a secondary peak in inflation, which is something that we do not want to see and something the stock market as a forward-looking market is thinking about. If interest rates are put down too quickly, that might actually lead to a rally in the stock market. However, that's not going to continue because inflation is going to go up and that's going to lead to a secondary crash, which is possibly going to be bigger than the first. Vodafone is down by only 0.88% in my portfolio, and over the past month we can also see a decline starting from probably around 7th of March where all the stock market was going down. So the dividend yield is still very high with Vodafone at 8%, but they haven't cut those dividends yet. Vodafone, I think, is a decent company in terms of its functioning. I think it has a long-term future, although not very popular with the shareholders. So I think it will be fine in the long run, although that is never a promise of anything. So the VJER also in a tumble since March the 7th. And as you can see, that is down by 7% in my portfolio. So that's £1.50 loss. So the Vanguard FTSE Japan is actually not doing too bad. So that's up by 2% in my portfolio, and that's a 3p gain. I have a very small amount of this. I only have around £1.50 in this. So nothing to shout about here. The FTSE All World High Dividend Yield is in my portfolio down by 4%. So of course, this was only another £1 holding. So nothing to cry about here. Unilever has been doing okay. So 4% increase over the past month. And that is still considering that over the past month it's gone into steady declines. So Unilever hasn't been doing too bad. Tesla over the last month, of course, has seen a dip and a slight recovery, and that is up by 46% on my portfolio, which is very good to see. I think Tesla going forward as a company has huge potential. The recent dip that we did see a few months ago was honestly a really good point to possibly buy and hold for long term. So Tesla going forward is a company that a lot of you will be interested in. However, I'm not very interested in individual stocks as an investor. I'm more looking to take advantage of index funds and possibly some of the volatility behind that. Tesco straight flat at no return, so that's not too bad. But over the past month, it has gone into a decline following a rise. So Starbucks, infamously named as one of those recession-proof companies, over the past month has not been doing too great, and that's lost around 1% in the past month, so not too bad there. So Rolls-Royce over the past month has been doing pretty good considering the whole stock market. That is up by 18%, so that's a £4.82 increase. So still Rolls-Royce does not pay a dividend, although there are talks that Rolls-Royce may start to pay dividends, but I think Rolls-Royce personally, as someone who doesn't really like individual stocks, is possibly one to keep for the future. So that's something that I'm going to look into, maybe buying more, but holding it for the long term, absolutely. So Pinterest over the past month hasn't been doing bad at all. Following news, it's actually increased in its share price, and that's up by 5%, so that's something really good to see. So Orange, I have 1.1 shares in that, and that's down by 2.36%, that's 25p loss, and over the past week it has gone into a slight decline, but it's not too bad. So Nvidia's had a crazy good month, and I have returned 79% on Nvidia, which is absolutely great to see. So as you can see, over the past year Nvidia's been doing absolutely amazing. This is because Nvidia is actually at the forefront of AI based technology. So Nvidia's behind a lot of stuff. They're behind the graphics processing, they're behind AI, they're behind massive production companies doing 3D effects, and recently their AI has been put into gaming. I believe DLSS is a technology Nvidia have made where it kind of super samples your games to look a lot better than they are, and this technology has really been pushing up. Artificial intelligence overall is an absolutely booming field at the moment, with GPT-4 coming out, ChatGPT taking over the internet, Microsoft investing billions into Bing and AI integration, and also recently they have announced that Office 365, a software that's ubiquitous to nearly anyone using a computer, whether it's even a Mac or Windows, they're going to start incorporating ChatGPT like features into Office 365, basically meaning that almost everyone has access to AI in some way or form. Although if you really have been paying attention, AI has been with us for decades now. Our smartphones have been taking AI based photos for ages now, and we don't even realize that. So it's actually very important to understand underlying changes in technology, in the way that we actually make food and all sorts of stuff. So understanding that, we can see where the kind of future in tech, in agriculture, in other sorts of stuff is going to excel. So definitely Nvidia is doing amazing, 80% increase, absolutely bonkers to be fair. National Grid is not doing too bad at all, and that is up by 4%. Lloyd's Banking Group, so not doing absolutely fantastic. That is down by 13%, which is really big, and as you can see over the past month, a huge decline, and I'm guessing the date is March the 9th, of course. Yep, so a huge decline. I reckon these companies are all going to recover, so it's going to be fine. You can grab your bargains right now with Lloyd's Bank. So my biggest holding by far is in the GSPX, and I am absolutely loving the volatility here, although I'm not someone who times the market perfectly because that's impossible. I have been enjoying buying and selling, and as you can see, if I go into the history, I've been buying and selling and making money, and that's the only reason why I have £1,800, because I sold out of that, and I'm going to buy again when it dips again. Essentially, it is not a good strategy, but I think over the coming year or so, the GSPX is going to be a flat line, meaning you can buy whenever, you can sell whenever, and you're just going to recover your money at any point. So for me, it's fun. For me, it keeps me excited about putting my money in the stock market. At the end of the day, it's my money. I don't recommend you doing this. The best thing would be to just keep buying this consistently and racking up the amount of shares. Currently, I have around 10,000 shares in the iShares S&P 500, so I have around 70 to 80,000 pounds worth in the S&P 500. Going forward, I want all my investments to just be in the S&P 500. And yeah, we'll see what happens in the future. Royal Mail is also not doing too bad, so that's a 5% increase, 65p gain. Over the past month, there has been a dip, but it looks like it might be recovering soon. So of course, Royal Mail is plagued by strikers, it's plagued by labor shortages and stuff like that. Not the best company in the world, but not a whole lot of shares in there, and I do think they pay a dividend, so they have a high dividend yield, which could indicate that they are going to cut their dividends, but I'm not sure. Honestly, not a big holding for me, but it's something to pay attention to. IAG, a free share that I got, so this is down by 20%, and I'm pretty sure this is a financial company, and that is why it is going down so much. So H&M, I have 1.05 shares in that, and that's up by 6%, which is not too bad at all. GSK up by 5%, and over the past month, it has gone into steady decline, but I think GSK is one of those companies that has long-term future. It's a drug company, it's ubiquitous to so many houses, and that in my portfolio is up by 5%. I have 0.06 shares in Fiverr, and that's down by 7%, so not too bad. EasyJet has gone up by 31% in my portfolio. Over the past month, it has seen decline, but 31% gain is not too bad at all. Direct Line Insurance is absolutely tanking. I know a lot of people have sold out. I don't think it really does have much of a future. That's down by 23%. I'm not going to sell it because honestly don't have enough to worry about. It's like less than £4, so it is what it is for me, but I would not recommend investing in this company. Lufthansa, another aviation company which has been doing okay considering the big dip on the 9th of March that a lot of other companies saw. That is still up by 7.9%, so if the dip didn't actually happen, Lufthansa was doing pretty well. So DECA, DAX plus maximum dividend. Honestly, I don't know why I hold these random stocks. Only £1 worth, and that's up by 8%. Carnivore is down by 9%, and that's a 66p loss. BP, I received many free shares in that. I think I actually probably received all of these shares for free, if not most of them. That is down by 10%, although BP and Shell, all these gas companies, all these oil companies have been seeing absolute record-breaking profits, with Saudi Aramco seeing huge profits. So going forward, the wholesale prices of gas and oil is going to reduce, although they have actually reduced greatly for these companies. However, they're not passing on these reductions to the customers, but going forward I think they're going to have to, leading to a period of less profits for BP, Shell, Aramco, everything like that. So as we should know, all energy companies go through cyclical phases. We're probably at the tail end of its profits and it might see decline going forward, with investors kind of guessing that they're facing the end of the game in terms of high profits. So BMW is down by 4%, which is not bad, but it was a free share anyway. Aston Martin in my portfolio is up by 58%, which looks great, but the company has seen better days for sure, I can say that. Apple up by 8% in my portfolio, which is pretty amazing for a tech company, especially one in the S&P 500. And as you can see, over the past month, instead of seeing the decline, we see an incline, which is pretty cool. I'm not exactly sure what the exact reason for this is. Maybe iPhone sales aren't as bad as they thought they were. Maybe Apple is working behind the scenes on new silicon or something like that. I'm not too sure, but Apple is doing good. Amazon up by 8% in my portfolio over the past month. Again, just like Apple, an increase, almost exactly the same increase. Not exactly sure what's going on there. If you do know what's going on, make sure to leave it in the comments down below. Alphabet, one of my better companies to invest in as an individual stock, that is up by 12%, and over the past month almost exactly the same increase. I'm not sure what's happening with the technology sector, but maybe the tech sector is going up as usual. However, the banking sector and everything related to financial has been going down. Alibaba down by 15%, not great. Could be due to US-Chinese relationships, although I'm not exactly sure there either. Airbnb up by 21%, not too bad. It has seen decline since around March the 9th, I guess, but 21% gain is not too bad. And lastly, AMD has been doing really well over the past month, with the exact same increase that we've seen with the other technology companies. So like I said, I'm not sure why, but it could be fun to find out why. So let's go into my history and see what kind of stats I have. So the total realized profit is £28.60, which is very false. Like I said, I've been buying and selling everything in profit. However, this number just keeps going down because it just doesn't know which shares I sold at what point. Dividends, I've received up to this point £16.13, with a sizable dividend for my portfolio size anyway, coming in on the 1st of March with a £10 dividend in the iShares S&P 500, which is not too bad at all. Unfortunately, I didn't receive dividends on my free trade account for the other shares I had, which was like over 8,000 shares worth of that, so it would have been like £300-400 worth. I didn't receive it from free trade. So yeah, Trading 212 is honestly a lot better platform than free trade. I would not recommend anyone to start their ISO or anything with free trade. And honestly, I think Trading 212, one of the best platforms out there for stocks and ETFs. I think there really is only two choices for beginners, Trading 212 and InvestEngine, which are very different platforms, but it's good to have unique selling points as a platform. And so let's go into my almost daily dividend pie and see how that's been doing. So I have around £401 invested in that, and to date I have received £3.95 in dividends, which is not too bad. However, the portfolio is doing really bad, so it's minus 27%, which is not great at all. And let's go through some of the holdings and see the change in that. Apple up by 1.1%. Realty income not doing great at all. That's down by 7%. Johnson & Johnson down by 14%. Canadian Natural Resources down by 18%. 3M down by a massive 20%. Honestly, I think that's a good time to buy something like 3M. Dividend company, long-term future, down by 20%. Pepsi's down by 5%. AT&T down by 3%. Procter & Gamble quite steady. LTC Properties down by 19%. Even McDonald's is down by 3%. JP Morgan & Chase, which is financial related, down by 3%. Caterpillar, which which was doing really well over the past 3 months, has seen a huge decrease. So that's not great. IBM down by 13%, Bank of Montreal 13% down, Chubb, I don't know what that is, down by 13%, Starbucks up by 2%, Reckitt Benckiser down by 0.88%, Starbucks up by 2%, Chevron down by a massive 17%, Aflac down by 11%, Nucor up by 2.37%, Archer Daniel Midland down by a massive 23%, WW Granger up by 12%. As you can see, many of these companies are very much in the red. This is why I wouldn't necessarily invest in something like the almost daily dividend pie. During the past few months, it was performing good. However, as an investor, I would rather just invest in index fund, have everything in one, instead of going for something like this where you're just putting so much money in so many different companies. The overall returns are going to be really low. The dividends might not even be that great. So for me, not the best. However, if you do want to check out this pie and invest in it, you can do by clicking the link. And if you sign up using that link, I think you should still get a free stock, even though the free stock promotion doesn't work for normal links. So make sure to check out some of my other videos, and I will see you in the next video.